From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the Close of Business on this Wednesday. I'm Andrew Gagan. Great to have you with us here at AusBiz as we round out the day. Ending up pretty much flat, actually. Is that a surprise, given we're very close to Christmas? Taking a look at the COB 200, marginally negative, whereas on the ASX 200, I'm just looking for an update there. It this point is it's dead flat, which is probably a sign, as I mentioned, of low volumes, people turning off. We always like to take an early one, don't we, when it gets to Christmas time here in Australia. We're just taking a look at the themes for the day. Yeah, let's call it a weak Wednesday. Weak volumes there, weak movements there, as I mentioned, ending up flat. Budget blowout. This is off the back of the mid-year economic update from the government, looking ahead to those deficits as it continues to ramp up funding, particularly the NDIS proving to be a big sore point for government funding at this point. And the Fed in focus tonight. All eyes will be on the US Federal Reserve, with expectations they're going to cut interest rates by another 25 basis points. The focus, real focus though, will be on the dot plots, what comes after this meeting as we head into 2025. All right, catching up what some of the sector performances there. First, the industrials, and that's fairly mixed, as you can see, with Transurban among the pick of the bunch there, up almost 2%. Elsewhere in the healthcare sector, CSL, one of the bigger movers, helping to keep the market somewhat in the green, only just at 1% higher overall. And in the retail space, largely positive, not a lot of movement there, though. The Lovisa is up 2.5%. And the banks, always the big movers there. Interestingly, the Commonwealth's come off by about 1%, dipping below $160 at this point. Westpac, though, managing to finish in the green along with Macquarie Group. So to the top stories of the day. Now, Insignia shares fell after the financial services giant rejected Bain Capital's $4 a share takeover bid. Elsewhere, Mineral Resources has completed the sale of 2 exploration permits to Hancock Prospecting for an initial consideration of $780 million. Vulcan Energy, those shares on the move after it signed a $1.4 billion loan commitment with Export Finance Australia and 7 commercial banks for the financing of its Phase 1 Lionheart project in Germany. Clarity Pharmaceuticals has moderated gains made earlier. The stock is up over 13% after it revealed it had developed a product contributing to the diagnosis and treatment of cancer. And HMC Capital rose after 2 days of losses, while the stock remains down about 16% over the past 5 days. That's particularly given its holding there for Digico, which of course debuted last week. So let's get across what we're seeing in the market. And Julia Lee joining us from FTSE Russell. Julia, welcome back to AusBiz and the COB. Look, it's a bit of a non-event today, as it turns out. Is this because, we're on the cusp of Christmas?
I think, the Christmas illiquidity, together with the Federal Reserve meeting and the results, which are due Thursday morning Australian time, are probably keeping investors on the sideline. But given that lead from Wall Street was pretty soft, it's not a bad result for the Aussie share market. If we have a look at what happened overnight in the US, the Dow Jones Industrial Average down by 0.6%. And that actually marks the 9th consecutive session where we've seen losses in that index. That's the longest losing streak that we've seen since 1978. So the S&P 500 also down by 0.4%. So given those leads and the fact that our financial sector was down lower, and of course that's one of the biggest weights on our market, it was always going to be a pretty difficult day. So I think finishing flat is a pretty good result for the Australian share market. However, having said that, those interest rate sensitive areas like property, utilities, the healthcare space and the industrial space, these areas were the outperformers of the day, so gaining more than 0.5%. And it was also interesting to look at the market from a size angle as well. Although the S&P ASX 200 was relatively flat, the small ordinaries had a good day, up by 0.4%. But all in all, December's proving to be a difficult month for investors, down about 1.5% for the Aussie share market. So really hoping that Santa rally kicks in between Christmas and New Year's.
We shall see whether he delivers expectations. Perhaps he will stateside. No sight of him yet in Australia, though. Julia, of course, we mentioned the Fed decision tonight. Expectations it will cut by another 25 basis points, but it's all about what is ahead and those dot plots. What's the market going to be considering, do you think?
Yeah, I think you've already seen those interest rate sensitive areas move. So when we have a look at things like the industrial sector, which holds a lot of those infrastructure stocks, healthcare, utilities, which of course also holds quite a bit of infrastructure and property as well, these are areas that tend to have higher levels of gearing. So as interest rates fall, not only do the funding costs fall, but also being able to attract funds to these sectors as well. So we've already started to see a move in those particular areas, and we'll probably continue to see moves in those areas in 2025 if company outlook statements are anything to go by. But if we have a look at what's expected in the US, 25 basis points is already baked in, but consensus has really been moving on what to expect in 2025. I think initially the market had been pricing in 4 rate cuts in 2025, and now we're down to half of that, so just 2 rate cuts. So it'll be interesting to see whether the Fed dot plots reflects market consensus at the moment. And of course, the Federal Reserve only started cutting interest rates this year in September. So we had 25 basis points in September, 25 basis points in November, and probably 25 basis points in December. And that will take the US interest rate to a range of 4.25% to 4.5%. And then the market's pricing in only another 2 next year. And the reasons for that is because inflation's still seen as relatively sticky. And the other thing is that the US economy is still remaining relatively strong. We saw retail sales numbers last night, and it looks like the consumer still looking pretty good there. So I'm watching the interest rate decision, but I think more importantly, watching that outlook for 2020.
Julia, I also see you taking an eye on biotech. In fact, today we had that news from Clarity. It's developed that product in terms of diagnosis and treatment of cancer. What are you watching in that sector at the moment?
Yeah, I mean, when you have a look at those biotechs, they sort of live and die by not only the pipeline, but also the clinical trials. And there were some pretty big moves in that sector. You mentioned Clarity, and that was up by about 13%. So they've added to their pipeline. So looking at a product which targets tumours in cancers. So the stock there was up by 13%. But not only that, that stock's in focus because it'll be added to the benchmark ASX 200 next week. So we're probably seeing quite a bit of liquidity coming in ahead of that benchmark addition. But not only that, in the biotech space, we've also seen a biotech called Percheron down by 88% today. And this really shows the risks of some of these smaller biotechs when you do have these clinical trials and the results don't go as expected, and that was the case here. Now, Percheron looks at therapies for rare diseases, and unfortunately in this clinical 2B trial that they had, the results weren't great, and you saw the share price absolutely plummeting. So interesting to see those two, one a great performer today, one not so great performer, but really having a look at that pipeline as well as those clinical trials are really a key thing, as well as the addressable market.
Yeah, it tends to be those binary outcomes in biotech, isn't it? Either it works or it doesn't. Now, elsewhere in other news too, Insignia, as I mentioned there, share price taking a big leg lower. That's after rejecting that takeover offer.
Yeah, I think this is an interesting one. That takeover offer at $4, that was at 17 0.6% premium to the last close before that offer was made. So if you have a look at the share price reaction today, it hasn't quite fallen down to those pre-bid levels, which means the market's probably pricing in that Bain Capital may come for another bite of the pie. So if we have a look at that $4 offer, the consensus broker target at the moment is at $3.50. So if you take in, I guess, factor in a change of control of about 20%, that might take it to about $4.20. Having said that, those broker ratings have been rising on the back of this takeover offer as well. So interesting to see whether Bain Capital, the private equity company, comes back, especially given that there are a few other deals in Japan and other parts of the world that it's watching as well. So watching Insignia, one of our largest wealth managers, it has things like wraps, platforms, superannuation, as well as financial advice, to see whether Bain Capital comes back. Otherwise, it might be a difficult start to 2025 for the shareholders there.
Julia, great to get across what you're seeing in the market at the moment. Thanks for joining us from FTSE Fund Russell.
Thanks, Andrew.
Well, let's take a look at our stock of the day. It was Viva Leisure today. Viva expanding its Plus Fitness brand into the UK with execution of a master franchise agreement. Jonathan Takadina from MPC Markets and Philip Pepe from Shaw & Partners had a good look at the stock.
From what I see from the chart, it's actually just been basing out and just going sideways for a long, long time. The last few announcements haven't actually caused the share price to move higher. So unfortunately, I can't see this. We've had some more news as well, and this hasn't moved the trigger. So it'll have to be some other something else that drives the share price or changes the narrative. So for me, it's a hold.
Do you need a gym membership? Do you need a coffee per day? My answer is hell yes. What are you people talking about? But for a number of people as well, not really. But also just the simple saturation of gym memberships puts a cap on price increases. The advantage they have with their Plus Fitness is it's cheaper. It's like I think $8 a week. So you can, the World Gym is 30 plus a week. So it's interesting that they've gone top end. Going into an affordability crisis that we're in. So, but it is a debate, which is why people probably put this stock aside in terms of, well, it's not a must-have.
Okay, so let's take a look at where we're at on the market. Then those leaders, Zip doing well again today, up almost 8%. Megaport also in the tech space. Paladin, a bit of a comeback by some of those uranium stocks. Westgold Resource, a bit of an outlier there. Most of the gold stocks actually down. SiteMinder also up on the negative side. Sayona off around 5.5%. Insignia off the back of the rejecting that takeover bid. Coronado Nickel and APA rounding out the bottom five there. In the small cap space, Omni Bridgeway up 51%. Easy Life also doing well today. Titomic, Fiducian and Solvar, and negatively. And Terrace Technologies tumbling 20%. Murray Cod's been on the move too recently. It's off by another 7%, along with Timboran. And as we mentioned there, Sayona also off. All right, so what's going on overnight? Well, it is all about the Fed. That will be revealed tomorrow morning, in fact, our time. As I said, expectations there are a 25 basis point cut. The focus, though, will be on the dot plots and commentary there from Fed Chair Jerome Powell. And tomorrow, our time, a glimpse of the national accounts in finance and wealth for the September quarter. So, to where we finished up on this Wednesday on the SIBO, down ever so marginally there, making a slight comeback, but took a bit of a tumble, particularly after the release of the MyOFO update there on the mid-year budget update from the government. And for the ASX, down a similar amount, in fact, 0.06%, so marginally negative there as well. That is the COB. Thanks for watching and listening. We'll join us again tomorrow.